Hi, good morning. I'm Russell. So I've had some requests for people to kind of go over some stuff real quick. So I was just gonna go over like some of the system to show it. And as probably everybody knows, I started trading in 1985, I guess it was. It was like 19. I kind of been trading ever since then. My family farmed, and so we were always doing futures and stuff. So that's kind of how I got into it. And then at age 12, I started developing software on CPM machines, and kind of just went from there. And then I started building systems for corporations and trading systems and stuff like that. So it's kind of how I got into it. When I first started trading, it was pretty difficult. I couldn't really figure out what I was doing. And then I started kind of getting into technical analysis probably about in 87 and started using Graph in the Box, and I went from there. And I was using CompuServe to get the data because there wasn't really an internet at that point in time. And I got into DTN and got the satellite dishes and all that stuff. So, but anyways, so on the trading system, basically, I'll just go over real quickly kind of how to use it. And what I have is fractal graphs, and I like using those for myself. And on the fractal system, all a fractal graph does is takes the weight of the stock trading data, puts it into a different presentation. I like to kind of see it that way. So if the stock's trading like this, kind of, the fractal system, all it's doing is trying to disaggregate it into pieces so it's kind of easier to see these movements. So it's finding these areas like that, and it's displaying them on the screen so I can kind of see what traders are doing. So that's in essence what it's doing, and it's creating these patterns. And then once the pattern's established, I can do statistics on it and do a lot of other cool stuff that I'll be implementing in the near future. So fractals, there's a fractal interval. I call it the wave because it's a smaller word, and it's basically this wave number is how much time is spent above or below this pivot line, this center line. So the larger this number, the more time we're above or below. So a 7 is just basically giving it more fractal data to analyze in the wave movement. So it gives it more leeway. And the pivot line is the neutral line, the center line. So when the fractal wave pattern, when the fractal interval is larger, it spends more time above and below this pivot line. So what this does is, for me, I can see like how many days, trading days by the number, is spent below and above the line. So it kind of just sets an expectation. It's like I know if we're up here, you know, it's like 21, 27 trading days, 19 trading days, 39, 3 and 1 on these shorter cycles. And then down below, you know, 9, 13 trading days, 18, 6. So just kind of have an idea, because like a lot of people I know use RSI, and RSI has a definitive interval. Usually it's like, I think 14 is kind of the default. And here there is no definitive interval. You just tell the fractal system to use 7 for an interval, but it can go as high or as low above the center line, whereas RSI is always peaked. You know, it's capped, so it's like 100% to 0%. So here, if it ran for 30 days, it would show it, 50 days, it would show it, and it would show the relative move. So the percentages are across the lines, and the numbers are only specific to this move and this move. So right now it's basic, well, I kind of said that wrong. So these numbers are to this move and a pending move here. So right now it's saying that it's moving above the pivot line. So 7% is 160, 13 is 171, 20 is 181. And if we started to move down, 3%, minus 3% would be 147, minus 6 at 143. So it's showing this downside that's possibly in the works, going to be in the works at one point in time. And then it's showing the upside that's currently moving through. And then this stuff down here, this macro trend, this is just another vector at a longer interval underneath the hood. And then this Bollinger expansion area, that is, we have the Bollinger Bands. They're kind of like moving around. That expansion is just basically showing where the compression's at. So there's that. So normally on the patterns here, what I like to use is, I like to, well, use Intraday myself. So I'll bring up one like coin. And, oh yeah, and to navigate the system, you just basically right click. For those of you who haven't used it. So you right click and then there's a set of menus underneath. So when you want to add symbols, you can right click and then say add. So what I'm going to do is I'm going to add coin. This is one I messed up on yesterday and Thursday. So let me add coin. And I had it in my watch list. I was going to do it in the challenge account. I just working on so many different things, and I was trying to devote time on Friday just to the challenge account to trade the heck out of it. Okay, so this is one of my favorite ones. It's a 760, and so it looks like this. In the system, what I like to do is turn on the dots. So if I go under the graph settings, then I change it from candlesticks to dots, because that way I can more clearly see where the closes are at, where it looks like we're gonna move up or down. That way, like, the whole premise is this vector line that's purple, it's linear regression and support. Or excuse me, it's regressive support and resistance. I run through the data set, trying to find out where the price turns up and down through resistance and support, like in this drawing over here, like in this drawing right here. And I try to act on it. So the idea is, like, you know, if you like to trade coin, for example, you start to see to go through the green, then there's a possible change underway. And the only issue will be is if you can get back above the pivot when that occurs. So it's like, ideally, you know, like when you're breaking through, you watch the trade. If you can't get through the pivot, then you just exit out of it, and then you wait, because you want to, you know, you want to get through the pivot and then run up is the goal. And down here, this little red green strip kind of helps. Not fully, but kind of. You know, if you're underneath a green, sometimes there's more chance for a continuation. of the pattern. I'll kind of look at that too. And then also the compression. Like when we get down to this line here, it's highly compressed on a Bollinger Band. So that means that there's energy potentially pent up. So it has more capability to run. So it's a kind of, not only is it down here, but it's also when it kind of hooks. That means that the Bollinger Band's going to expand. Oh yeah, and two, you can, down below there's a button, fractal graph or linear graph. So if you turn on the linear graph, you're kind of seeing the same information we are on the fractal side, just on the linear side. And let me do something. I'm going to go to the graph settings. I'm going to say analysis. I'm going to turn that off. And I'm going to leave this as a dot. So you can kind of see also too, you know, this has a different view to it. So where I messed up on coin was so there's symmetry in these graphs. If you see these highs, like this high, so a lot of times like it's a tip off, a clue. So a lot of the times we'll try to achieve at least the past high. So what happened was I saw that coin looked like it go to 75, and this is what it ended up looking like, which I just totally dropped the ball on it. These are kind of the plays I like. So ADHD was nice enough. He created a folder. And he posted these other indicators, this other vector into it. Not exactly like the one in the program, but it's kind of similar. But what I like to do is put it on 5 minutes for a little longer term trend, so I can pick up these bigger moves. So what happened was on Friday, I don't know, I was going to trade it long and I brought it into my list and I was watching it and I just got distracted. But because we got up here the last time we were at 75, so there was a good chance we would kind of head towards it, which we did. So on Thursday, you know, it came off 8 cents and then we, you know, started moving up on Friday, and I just kind of wasn't really paying attention to this at the time, I guess. So that's one thing to look at on this stuff is these symmetries or prior highs and prior lows. And it's not a perfect system, of course, but it gives a good idea. So then it's just managing the trade. It's like when we look back over here to the left, we've got this really high. And this is one thing to kind of keep in mind. When they're super high like this, that like made a 43% move, sometimes back to back, they won't be able to do that. So, which this one shows evidently it didn't. So, but when this low was created, then it went to create, you know, another low. And then this high was kind of the same thing. It was kind of a little exorbitant at 26%, so I couldn't kind of get back up in there. But now coins, so what I'll be watching for on Monday, Tuesday is a breach of the 74.28 come down. And the other thing I look for is these patterns. You can see like there's this M pattern. So I'll look for the W's and these M's. So here's like a really big W. And then like here's some smaller W's. And then we kind of have to wait for it to develop, but here we can see, I can definitely see it's an M pattern. So an M pattern, I expect it to break this low and then to start running down and using our symmetry, you know, maybe we can get a 12% pullback or something. Maybe we can get down around to this low, but the first place, so, and then these over here to the right, these are like support areas that have been prior detected. But the overall pattern, I expect it to get down in here, which would be pretty nice. There's an indicator I have over here to the right. And what this does is this looks at clusters and it's analyzing the cluster. Whenever there's these clusters that form, these high and low areas, get clustered together, it's seeing like out of all the times loaded in the graph, which is 50 days on 60-minute intervals, plus the holidays and weekends, it's seeing that 80% of the time we get to at least here, which would be 71. And 50% of the time we at least get to 66. Knowing this, now I can create an actionable trade. Like, let's say we were looking at 66, 61. This is what I do. I'll pull up, I don't know what it is. It's the 24th. So I'll pull up a put for the 24th. And that was at 60. It's like 66 area. Should be 65. So do this. All right, so one of the tricks is we know these things they're gonna try to take them to zero. And if we did get down here to 66, that thing's at 65. So it's already overpriced. They're basically saying we need to get to 65 minus $1.66. So 63 like 40, 63.34 is where value of that thing is. Let's do this. Let me check a 75. It's funny, they're saying the same thing we are. We're putting it at 520. So 70. So if we got to like 66, 65 area, this would be $10 next Friday. So a lot of guys, what they'll do is they'll do a debit spread on this to bring the cost down. So that way, they're not having to pay 520 a contract. They're paying in the dollar something range of contract. This is a 5-minute interval. And then another thing I kind of like to do is throw in a trend line. So that way I can see the trend line breaks. And then let's see if that works. So we'll do the 17 call, 75. By patiently adding these trend line breaks, kind of help gauge entries too. So anyways, this indicator will figure that stuff out, or figure these odds out. If we right click too, so since we're running a wave 7 60-minute, if we right click and go to option analyzer, this is our wave patterns. This is how it's moving up and down in regards to the pivot in relationship to this pivot. So it's showing our chances of continuation down here, both short and long. So it's saying in coin, there's only a 31% chance of continuation to get assigned an H13. So what that means is if you take 31 and subtract it from 100, that's the odds that we could go to an L1. See, as we increase, there's historically been less and less probability for continuation. With Aaron and myself, we've been doing this one thing in here called data values. This will be new. So this will be in the update. What this does is give percent odds at every level for every wave pattern. for every high and low. So now we can come in here and we can see, like, on the short side, if we go to an L1, that when we turn short, there's a 100% chance we'll hit 73.20. There's a 92.3% chance we'll hit 72.19, an 84.6% chance of 71.43. So it gives us our probabilities. And okay, so there's statistics, it's based on this going up and down. So if we have an outlier or something that, is abnormal, then it'll may or may not inform. But overall, in general, when trading it, that should work okay. So what it's doing is it's showing our wave, which like an L, H, showing the 6, the counts, how many 60-minute periods, aggregations it's been inside there. So this has been 6. It's showing our odds, so 15.4. So what that basically says is L6, that 15.4% up here, right here, is containing 68.19. So out of the down move, this holds 15.4% of that range on the down move. On a percent odds, this way, up and down, 69.2% of the time we achieve at least that. So and then it's using the vector. So the vector is the new pivot price. So it's 74.28. Because it's basically saying if we move down, the 74.28 is going to pin as the pivot, and we're going to go down from there. So it's basically saying your vector 74.28, we've moved down 1.5% from 74.28, which represents whenever we turn 100% of the time, it at least achieves a minus 1.5% down. Okay, so now that we know that, if we want to build a map of this to put into like a trading program like Thinkorswim or Wave or whatever, basically click on it. It will build it over here on the left-hand side. So it builds our L1, 1.5, 74.28, and it follows this format up here. You can just type anything in here. You type in the format up here, both on the short side, on the L side, and the H side. It will format it however you tell it to. It also generates ThinkScript code. So if you want to take ThinkScript code and plug it directly in, you can say ThinkScript, and it just right now generated all the code for ThinkScript. Then you can copy it to the clipboard, bring it over, and paste it into an indicator over here. So that's how this all worked. The landscape thing that was just added in, let me pull Apple up. And what this is doing is it's figuring out the money where the options are at. And eventually what I'll do is in the data warehouse, it's going to have these values so we can figure out where everything's going to go. So to use it, I click load, get these up, contracts. Then I click a contract. So I picked March 24th, and then I do the calculate. So, all right, so it's just creative landscape. So what this means is on Apple, right now with what's in the pipeline with contracts, the market makers, the ceiling, this 161 area, 162, on this Friday, March 24th, they would like it to be either here or down here. And this is going to change as more contracts come in. See this gap? This gap here. And see this gap down here? That means right now, there's less money at stake to the downside. there's more money at stake to the upside. So the upside has more risk. The down half says lesser risk. So when we started this week, Monday, I could tell that the thing was going to be going up, the stock market in general, because when we started Monday here, these lines, like this aggregate, it was all like down here. So there was nowhere for it to go on the downside because these contracts, when they start money, they start going crazy. Like if I go up, let me bring this down. So see this negative amount? It's going to start to go positive as we get up into the payday area. They don't want it to go positive. That starts to be money that they owe. So they owe this in stock. So you can see right here, we're kind of in the washout line. So this is kind of where right now, if nothing changed on the volume side or whatever, this is where they would keep most of the premium, both on the put and the call side. It's analyzing both sides, seeing where the sweet spot is for them. So there's two sweet spots. It's up here or way down here. As I go up and move through this ceiling, you can see how it's starting to tack on like 28 million, 32 million, 40, 50. So that starts to be stock that's owed. So they're going to have to come up with all that 83 million in stock, 100 million. So these numbers, like the other day, I think it was in Tesla. It got to like $1 billion at one point, and it just like totally dropped away from that. I think that was last week. So it behooves them to get it out of that range because I don't know, for somebody to come up with $1 billion is probably not too easy. So not too palatable. Okay, so the other thing is when you're moving this up and down, you'll see over here on the left-hand side, it's moving through the contracts. And here's the exposure lines. So this is what they've got to come up with on the left side, or it's easier to see on the left. So what I do is I calculate the option. I use the least risk option. And you can see over here on the right, it says option 41.4, 286.3, 169, 184.2, all the way up and down. That option, the least risk, has the best gain. And the option might be kind of expensive because over here, so it's showing the option as 560 and it's saying buy to open 560 or less. And then it's saying sell to close at 639, which is a 14.1% gain. So it's basically saying if we're moving up or down, those are the contracts that are achieving the gain as it moves through the price. And it's showing up here on the histogram where that is in relationship to, so you can kind of get an idea if it's running an outlier or not. As you go up and down, you can change it to sort histogram to see it easier. So once again, right now with Apple, there's more hurt on the upside if we get above 162. So that's probably going to cap it. And then on the downside, there's more room. So if we pull up Apple, so right now it's saying there's more room on the downside, and it looks like it's a big M forming. Like March 24th. Going to calculate the money market maker's exposure. So if we, over here on the graph, so it's kind of funny. So here the floor is calculated at 143.84, so call it like 144. If I go over here, and if we had symmetry, like let's say it built this M pattern and we came back down here, like it's down here. So if I move here, well, it's the 144 line, 144.97, and this is 143.84. So right now it's saying Apple might try to retrace down to that. Once again, like, so this is options like in the works. So as more come in on the put or on the call side, it kind of changes these numbers. But right now, yeah, it's jiving with the fractal graph of a potential M. And let me draw this just to make sure that I kind of look at them. But okay, so here's what I'm talking about. Like when I say M, I see like possible that build, and then so what I'll do is I'll go back to the left hand side and I'll look for like patterns. If I see these, there's a failed W. It's failed because it didn't get above that high right here. And it came down. And then here's kind of another failed W. Like it's to make it be a good W, it's supposed to get above that high and keep running, which it didn't. And then there's that other pattern I kind of mentioned, I called it flying V. It's kind of an overall pattern here. Brought right. So it's kind of like this V, and then it shoots up like that. But so it looks like there may be an M pattern like this in development in Apple. It looks like right now the data is supporting that. And then, so another thing, well, there's a lot of stuff that goes in the system. I haven't built it in yet and ported it over. There's another one where, and Wacky Wolf did this the other day. I take this options data and I actually build a model out into the future of how it's showing all these prices are lining up. So I'll be putting that in pretty soon when I get some energy. So another thing I've added in, the screen capture thing. So what happens is the system, the fractal system, it actually creates libraries of patterns and stuff. So you can go in there and look at them and trade them. And it also has an alert system that says, oh, a new pattern's been added. I'll be adding that stuff. But the way it does it is it does it through like screen captures and it builds these libraries. So another facet to the system that I've started been bringing over is the screen capture thing here. So what I do is in the day, and this is in production, so you can start using it if you want. I do a save screen, and then I'll call it test. I'll call it Apple test or something. And there's also another part to this I'll be incorporating where you can do annotations onto it, onto the screen capture. So this is the screen capture right here. So you can actually draw on stuff on it. So I use this for myself to save analysis so I can come back and check things. So then it can go into view screen capture and it'll show it right here. And then it'll show back up. So it has the date and the time it was captured. And then there'll be the menu down here and stuff. It blues it wherever there's screen captures and stuff done. And there's another one where it shows like the icons and stuff. So I use this to, kind of keep track of stuff. And then I don't know, and then the data warehouse, I did that. I've been kind of sending out queries. So in the data warehouse, all you have to do is just transact SQL. So if you go here, there's, transact equals kind of the facto, de facto standard. So you can go in here and find how to create various things. And so I'll be adding more and more stuff because right now, like timelines, other than like the GAN tools and stuff like that to draw out timelines and arcs and things, normally the way I do it is I have also the daily data here. So I'd be able to select when the highs and lows are occurring throughout the last X number of days to see if there's repetition in them. But so right now, we've just got some of these options and some of the stock data coming in. Then this dark pool data comes in every Monday. I have the dark pool, and that shows like the institutions and stuff and all the. Where the institutions are bringing in. So I'll do this. So it shows the ATS right here that it's coming in from. So it's taking all ATSs. And those are the alternate trading systems that are out there. So they really shouldn't be allowed to do this. I don't know why the SEC and FINRA lets them do this because it hides it from us. So as retail traders, we can't see what's really going on. Because these banks and everybody, you can see that Barclays is, there's a bunch of trades here. So, and it has the symbols for whatever stocks have been traded over the last couple of days on an ATS. So you can see if they're building positions or not, or taking away positions. So there's that. And then, of course, when you come in here, I added the graphing subsystem so you can kind of graph to see stuff. So, like, bring this in. So I use this a lot. So this takes all the guesswork out of it. So if you want to see for anything like how Mondays look in a range, you can come in here and you can pick your table. Like this is whatever tables are supported in here. So this is SPY, and then this sets it to Monday. So if you want to see SPY for Tuesday, just type in Tuesday and then run it. So this is on Tuesdays from the amount of data that's in the system there. So it starts at that date. Make sure this is all. So Tuesday. So you can see that on Tuesdays for the SPY, most of the times it at least has a 4-point range from low to high. And then, of course, if you want to get the average, you can just use that. Be the average. So it's 6.52 from low to high, wherever the low and wherever the high is established. So I have a bunch of other queries I need to add in here to do all kinds of stuff. So I can find when there's a outside move, what happens next. Like if we have an outlier, like a 10-point move, like what happens next days, so all that kind of stuff. So I added interlacing and stuff. Now I'll be adding more and more stuff to that. So the interlacing is taking more and more time frames, compounding time frames into the same graph. So I use that because, like, when we're on a daily, so let's say I have a candlestick graph like this, and what I like to do is interlace into it. So that way I can more clearly see, and I can have routines over here that are finding, by looking at a daily, it can be finding this other stuff that's digging out patterns like W's and M's and stuff like that, and head and shoulders and stuff. So to create, like for example, right here in 2H, to create that 2H daily candle, you can see these six, and it's down here. You see it says 60 minutes. So here's the 60-minute data that's been brought in addition to the daily data. So you can see these 60-minute candles, how they made that daily candle form. It went up. And another thing I need to, there's tons of stuff I need to be bringing, porting over, is when these highs are hit. So I need to put up here, it was like at 10:30 a.m., 11 p.m., 3:15, whatever. So I can look at here and be like, okay, I know that yesterday the high was here. Are we going to repeat? Or traders going to look at that and try to do the same thing or not? So all kinds of stuff like that. So this interlace time frame right now, I just have it, the system's picking it. So if you come down here and do like a smaller time frame, the interlacing, so now it picked a 5-minute interlacing time frame. So these little candles are on the 5-minute mapped against the daily. So, and here's a bullish M. There's kind of like two kinds of, there's these bearish M's that are slanted down, these bullish M's. So you can kind of see that. And then to control it on the interlacing, if you don't want to see it mapped as candlesticks, you just do a line. And you can see it mapped as the line is close to close price. And then, and then there's the support and resistance and stuff. Let me turn this off for a second. So I'm trying to add all this stuff back in. So support and resistance is calculating. So it's mapping over to these imprints that are on the right-hand side. And what'll happen is it'll start to tag it when it thinks it's at resistance or support levels. So here for Apple, a red dot showed up. So it's suggesting that it might be starting to form resistance up here. It doesn't mean it's absolutely positively going to form it, but it's suggesting it. And then so it just kind of helps to look back. And then bar counts is just the actual number of days. And then the show options, I need to fix this again. Yahoo broke the data feed, they changed the stuff, and I need to fix that one to get that back running. And then the animate So sometimes I'll use the animate. Because it'll help strengthen how I'm seeing the moves. It replays them, that way I can kind of see, because you can just go forward and backwards. Because I have this thing too, it does auto trading. So sometimes I'll set up the auto trading, so I'll be like, oh, buy the position. Because that way, if I'm working on something and I'm not really paying attention, it'll go ahead and get me in the position. And then from there, I can start to manage it. So a lot of times what I'm doing in the day, and really for me, the best day is like Friday trading is what I do it. So I'll do yesterday, I was kind of picking on NVIDIA, because Seth was picking on NVIDIA, Tim. So I'll do a 1 minute aggregation. And this is just like active trading, it's not trying to hold the position. I'll do like a 50. So NVIDIA. I can pretty much gauge what the market's going to do like this. Let's see, 50 and 1. And then I'll turn it on like this. So what'll happen is when I'm trading, it gets my confidence up, right? Because I'll see like, okay, I got a green dot and then I broke. So I'm like, it's probably going to try to get above the pivot line. So the other thing is I'm always ready. So I'm like, okay, it's a green dot, but are we going to stay green or are we going to go red? So sometimes when I get in a trade, I'll just bring up the thing ready to sell it. Because if it doesn't continue, I look back here and I'm like, you know what, if it doesn't continue, I might give it 1 or 2 dots leeway. And if it can't continue, I'll get out, because I don't know, where the bottom might be. It might be down here, or it might be at the very low. So if like intraday trading, and the goal is to catch like these kind of runs, like there. And, after years of doing this, typically when our pullback is very mild, like this, that's the best chance for a higher run up, like here. When the pullbacks are deeper, then it seems like the extensions aren't quite as powerful. And the thing I kind of hate the most when doing this is when it's spinning around this pivot line. Because I like for it to get down below or up above, to get away from it. Because it's like, to me, this is like so indecisive. It's just kind of channeling sideways. So this is kind of what I was doing yesterday. You bring up coin. So the 51, also the other one I like is 105. So what's this coin? 105. Is this one kind of lets it run a little longer. And here was the same problem yesterday, or the day before. We were kind of like in this spinning around zone, and then finally on Thursday it committed, and then it kept running up. More data. So it kind of looks like that. So the black lines are support setting up, possible support, and then of course we have our entries, confirmed entries when we break, and we're red and we go to green. So yesterday, this from Thursday to Friday, this was an 1,800% move on the contract that I didn't do, that I needed to do. And I was first watching, and then something happened. I got distracted. And then you can see it's kind of like this dragon pattern too. It's like the tail's coming down, then the 2 feet, and then it kind of goes up. So this is another thing I like. And then the 760, of course, like I was showing. Pull this up. So once again, coin, we're kind of at resistance. So I'll kind of be watching it for trading a put, the put side. Aaron was mentioning Nova was mentioning this anime. It's real simple, but it's pretty wicked. So I'll do it with coin. Let's see what happens. Slow it down or speed it up. This is like the tempo of it. It's like if you really want to watch it slowly to be like, how does it react? So if I'm like kind of practice trading or just kind of wondering if I can improve, I'll kind of come in here and just do this quickly. So then I can see, how things are kind of moving. And then I'll know, like, when we come down here, like on these purples where it almost intersects, but like, you know what, I might need to be a little patient there because there may be more upside. So, yeah, I mean, it's. And then this in view, this is just how much day you want to be watching within the window. So this is 20. And then when you go like to 60, the window is a lot larger. Or if you show all, like all looks like this. It just is just stacking it up on the left-hand side. When you do all versus creating a sliding window. I don't know if I've ever kind of went over this. So it's graph properties. Whenever there's an indicator put in, the indicator adds properties to the graph. So like coin, there's no indicator put in, but if I click on something, you can see the little plus came on, and it's saying it added the cluster node, which is this. And then here's the values cluster node. Because you can actually right click and delete them, or you can click on that and then modify them. It's just another, because I'm building the system's like crazy, so I'm building all the core stuff to get to all this other cool stuff that'll go into it that I need. So let's see. And then over here, so way this works is now you do an ad, you can do a single, you can come in here and do IBM, you can pick the aggregation, the wave, or you can come down here and do a bulk. When you do bulk, it has all kinds of different waves with ounce and stuff. So when I had like IBM, you can see here, okay, so we've got 3 entries of IBM right now. So now I add IBM and I do a bulk entry of it. So now what it did was it put all those selected into here. So that way, and then 2, you do it, you know, you can do multiple, of course. You can do multiple bulk, or you can do them single, which is just what's in front of you here. So, and then symbols, I still make symbol lists. So there's a couple pre-canned symbols I just throw in here for now. So pick them. So let's see. I think the messages thing. So eventually what's going to happen is I need to add more servers for this. So there'll be real-time alerts on trades that are setting up. So like that trade I was showing you with the coin, it'll automatically be alerted in here and it'll be like, okay, there's, you know, 1700% upside potential. So it'll show up in the messages. You'll be able to turn it on or off. So it'll try to pre-calculate all that stuff. So it's like, you know, if you don't have any time, you can just either get a message. Eventually this thing will have the text messaging, so you can turn on text messaging. So it'll send out a text message, or it'll do a call, an IVR call. Oh, okay. So King Raj is asking about finding weekly options. So it's like right now, the market's like so, like there's no super big trending with it. It's like I would almost do the 70-60, because you can see here over days, like each yellow line is 1 day. Like let's say I'm going to do weeklies and you're trying to hold it for the week. The problem is right now it's like, you know, it's just so choppy. It's like there's not a lot of trending, which is kind of bad. So that means it's kind of like having to manage the contracts. If you're absolutely trying to find something like that, then usually that wave 7, let me find 7 daily, like something like this. And keep in mind what we're seeing. So each dot's 1 day. It's like, let's pretend this was Monday and you're like, oh, I think Apple's going to go short. You know, you don't have a signal yet, of course, but you're like, oh, I think it's going to go down. So here's Monday, Tuesday, Wednesday, Thursday, Friday. So if you bought a put, it would expire worthless. If you bought a call, it would expire worthless. And let's say this was Monday for pretend. You're like, okay, I think it's going to go up or down. So Monday, Tuesday, Wednesday, Thursday, Friday still didn't go down. So twice in a row, then you kind of have a bust. And then here you're like, okay, I'm able to go down. I went down 2 days. and then it went up. So it's like right now, I don't know, like 60-minute intervals is kind of what I'm just dinking with. Because these big ups like this, I don't know, right now, and even over all these years from 2020, like You know, it's not like these are real regular events. They're kind of followed by consolidation periods. It's at 7%. So trying to catch this kind of super trend. It's a little rough. And with the dots on too, another thing is I can see how closely the closes are aligned day after day. So it's like there's not any big change from day to day necessarily. It's just the aggregate of days is where the change is at. So I don't know, King Raj, I'm kind of just doing like this thing, 760 using for weeklies. So I'm kind of looking if it looks toppy, or we're getting a confirmed signal, getting above or underneath the vector, and kind of doing that. For the weeklies right now. And then, you know, it looks like by and large they're closed out the next day. So if they're entered on like a Monday, then it looks like about Tuesday they're closed. Or, you know, because it looks like here we had we had 2 or 3 days of a trend at best. But a lot of these other times, maybe 2 days of a trend. So trying to hold them day over days gets rough. You can see on this challenge account. So I started it when it was 2,500, and right now we're at 2,185. So the very first trade I did in this challenge account was a trade I've been doing for myself over and over, and I've been doing Tesla. And of course, the very first trade I put in the challenge account, it failed. I was doing 760, I think. So I was like, I was catching all these runs up here on my own stuff. And the first one I did, I swear to God, it was like, I think it was back in here. So all these big runs I'd been experiencing, they had kind of petered out. So it was just kind of a bad deal. And the problem was I broke the rule. Like you don't want to go, you know, really more than try to do 2% in a single trade. So I did I think it was a $440 contract in here, and you can see the damage it did. So it took us from 2,500. It took it from 2,500 to like under $2,000. And then last week, was it this week? I think we're at 2,400 here, 2,500 and something, which I didn't take off the table. So 2,500 something. And so then I think it was on Thursday, I was expecting, and I wasn't managing it like I needed to. So this is an example of letting the drawdowns get out of control. So it was about 2485 or whatever it was, and it went down to 1900. So yesterday, I think built it back by about $300. And the reason that happened was I was not managing the loss side. So I let some of the contracts go to zero, which is, you know, not ever supposed to do. And what was happening was on Thursday, I was too smug. So in these queues, well, then I'm kind of working on some other stuff too, so I kind of have to keep swinging around. So on Thursday, I was using our stat. Instead of trading what was in front of me, I was using wherever the statistic is, this one right here. So I was trading off the statistic that we had a 94, I think it was a 94% chance of a short. So I got into a short somewhere down in here, and I just let it run to zero. which was bad. And nowhere in here is it telling me to do that. And it's quite opposite. And I went went into the H's, and H4 is right up here for our target, which we hit, and then we channelized, and then we kind of broke out and ran a little bit more. So totally disregarding what I'm seeing, because these stats are, of course, when we run outliers, these stats don't have any meaning, right? Because we're on the fringes of moves. So that stat had no meaning because we were running an outlier. So that's bad on me, because I should have closed out, put out. Then I should have seen on our time frames we were moving up. Let me pull up the cues. I mean, it was just like very bad decisioning. So on Wednesday, we of course went long, and it was just nothing more than a continuation. So I was disregarding that. So me being ignorant and stupid led to having to now fix this and get it back up. Because a lot of these trades, like on Friday, a lot of trades are hitting. And I'm just doing, some of them I'm doing $20, $30 in. So, it's moving this up slowly, but then others, I think the NVIDIA is like 100 and something. So managing, like watching this stuff, pretty critical. Because I was kind of just assuming, we were at the high, which is a bad, absolutely wrong thing. I say it, if you assume, makes an ass of you. So I was assuming we were at this high, so we're just going to stop and break here. And the 94 would play out down, and we'd create a big M pattern. Oh, Skim's asking about those 0 DTs and stuff. So on the cues, when I come in here, so on this 51, since it's 0 DT, it's got to be fast. So I'll rely on this a lot. Let me pull up more data. So I'm heavily relying on this, because over here was Thursday. I mean, there was just no reason other than that odds and being at that high, So on the 0 DTs, I'm looking at this stuff. And what I'll do is I'll come in here, and I'm seeing these supporting trend lines like that. So I'll try to pre-position. So I'll kind of wait, and I'll put my marks in. I put in this white mark as the low. The low. Of course, doing this mark and not getting out of the put and reversing into a call was just beyond stupid. I should never, ever trade that way. That's just, I've been trading long enough. I guess I can't ever figure it out, but I've been trading long enough. When I put my mark and I know, and then we've got our H levels here as our target, because it's not obeying the downside, the 94% odds. So instead of, knocking out 1,000% or whatever here, I'm being stupid. But so that's kind of how I'm looking at Skim. I'm kind of coming over here. So you can see for Monday setup. So we're technically still long. We do have a potential of that. So what we'll have to be, and what I'm going to be watching for is this 305.20. So this is what I'll do. So 305.20, that becomes a very critical number. So that's the vector right now. Because we know when we start to break below the vector, we have a potential to go short. So I'm going to, in 305.20, And if I'm on live stream showing this and it looks stupid, you can yell at me. I'm like, hey, pay attention. 30520 vector. And then sometimes I'll call out so it's a 51 minute. That way I know how to track it. Sometimes on that one. And usually, not always, I'll do purple. Like that. So when we come into the session, now I already have like a big piece of information. I know if we can maintain above 30520, we've got more upside. If we cannot maintain above 30520, we're going to have downside. And the hard part is the waiting. So let's say, what's this? So this is 1 minute interval. And the reason I have 1 minute is because I want to know very quickly if this is working or not. So I can see I like the dots a lot. These dots are 1 minute. So I'll watch the dots. If I see an accumulation of dots, we're still moving down because some of this is using spidey senses. It's watching, because these are other traders or trading systems. So it's watching that. Now, another thing I can do is, and I'll do it in here too, is when I'm seeing this unfolding and I'm seeing a 93H, we load more days up. Oh, 5. Okay, that's as much as we can get here. So I'll go into here and I'll look at how the pattern is. So I'll look at where we're at. So here the mean is at 0.04, and now with our new data values, we can figure that out. So on an H1, or what are we? Okay, so it was assigned in H17. So I can come down here to an H17, highlight it, and now it shows me where we're at up here. So, if we're running, since we're at the mean, half the action is underneath, half is above. So it's kind of a split thing right now. So and over here on the left, we're at H17. So we're kind of in the center. So it could go either way. So that's why I come over here and I tag my 30520. And what I hate is this. If we come in high, let's say we come in up there. I don't really hate that. So I can see we've got 306.79 and 306.51 up here as resistance. I can also tag that. 306.79, 306.51. $6.59. So just kind of wherever, somewhere in there. So this is resistance right here. And okay, so now we'll go back to Friday. See my red line? I had that as a ceiling. So I kind of did a bad verbiage here, but I said the ceiling's a bit sketchy if we can get through it. What I was trying to say was, I don't think we're going to be able to get through it. And the reason was, this above that ceiling, that's coming out of here. I think what's happening is, since I'm doing all this stuff and the program's so CPU intensive, it's like not letting Discord work very good. All right, so now we know, here's our ceiling, 310.25, same deal we did Friday, right here. So 310.25. So 310.25. Put this in for Monday. And then I'm going to make it red so it kind of stands out. So I hope, okay. So you can pick any QQQ for this. It doesn't matter the wave or the time frame when you're doing this right here. So that doesn't matter. And then you load it, you pick the contract. So we're picking Monday, March 20th. And then after I do that, I click calculate the market move. And then it calculates the ceiling. So see this number up here, the 7 million? That means, okay, right now it's negative. That means the market makers, ideally, they want to move it out of the negative. Right on the fringe to when it starts to become positive. Because this is showing they're in debt right now. That there's a discrepancy. An imbalance, like, and it's not like massive right now. Not super massive for the Qs. So right now it's about, based on my math, what I can figure, it's about 84 million. Is what they're in debt for on Monday. Going out stock if nothing changes. So if nothing changed Monday, no more contracts, no more price move, right there, market makers are going to owe 84 million in stock. It's their liability. I call it exposure. So their exposure is that. The peak money line is where they would owe the most. And sometimes what happens, like there's so many calls up here and so many puts down here that they kind of get trapped. And I've seen it just almost land right on peak money or right around peak money from time to time. It's because they can't hardly move it without starting to tack on tens of millions of dollars in either direction. Because the traders have put on so many puts and calls both directions that they just start, the premium just starts tacking on heavily both ways. So it kind of stalls it out. Ideally, we kind of move to the extremes where the premium's being sucked out of the contracts as much as possible. So right now, 310.24, and let's put in our peak money line. So it's at 302.92. $302.92. So it's way down here. So 302.92. All right, so 302. So that's an 8-point, well, 7-point spread. Call it 303 to 310. So approximately a 7-point spread. Now, if we come over here, what I like to do, I already have the query set up. So here's our ranges for Monday. Let me do the average. So I'll do the average. If you highlight it here like that, it just runs whatever query has been highlighted. So that's why I just do that and I highlight it and run it. So our day range on Mondays on average is 6.52. And what do we come up with over here? About 7 points spread. So we know we're not too crazy because it's kind of lining up. All right, so the key is, where are we coming in at in the session? Are we going to come in here, test, pull back, going to come down here? So our vector is our line in the sand. When we start to get underneath, then, oh, and let's do this. Then we're going short. Okay, so not only do we need the peak money, but we need to add this. We need to add our 292.84 for our floor. 292, that is way down there. Sorry, 292.84 is floor. All right, so here's our range. It's almost impossible for the market to make a move above or below. Very difficult. So Monday, so in my head, ideally what I'd like to see is open here, test, or kind of head towards this to test, and then put on a short, then come down, break through that, and then, you know, on at least 6.52 points. So what we can do is, okay, so let me do this. I'm gonna use and I'll try to get this wrapped up and put out on the server by Monday morning. But what I'm gonna do is, I'm gonna use I'm gonna do this wave one, because I always like to use ones because we have the most data. And what did we end up with? Okay, so it was assigned an L1. Let's say on Monday, we could go to L2. So what I'll do is this. I'm gonna find the first L2. So is it 302.91? Okay, so 39.4% right here of our moves down is owned by L2s. So L2s own 39.4% of the overall moves. So if you take 36 and 39 and add them together, L1s and L2s own that much of the pie slice of the overall move short. So I'm going to add 302.91 for my first target if it went low. 302.91. Which, of course, is near peak money line. And then on the thing, what does it say? So our odds of hitting it, so these odds are based on the L2s. So if we do move to an L2, we have a 90.9% chance of hitting that level in L2. That doesn't mean overall we have a 90.9%. It just means in this bracket of L2s. In the bracket of L2s, here's our odds based on the volatility, the past volatility. So we only have a 24.2% chance of hitting 292.74 if we get an L2, and we have a 90.9% chance of hitting 302.91 if we get an L2. So I'm going to add that. So this kind of gives me an idea of what can happen. And then, so now what I'll do is I'll do a 78 level. So 301.85. I'm just picking stuff that it's like easier to hit. that I think is easier to hit. 301.75. So now it's up to the market how it starts to come into us. And then we can also do the same thing. Let's say we decided to continue the up move. What are we at right now? So let's say we went to an H1. Same thing. If we continue an up move, if we do get a sign in H1, we have 100% odds of hitting 305.88. So what I'm going to do is I'm going to come down here to my 75% odds line, which is 310.05. So 310.05. I'll just kind of do it right here. Pretty funny, Mr. Ramstein. I'll just call it 75. I think it was 75.8 technically. So it's a pretty squishy little range. So here's one of the things I look at. Okay, so it's, the range maybe 6. When I come in here, and I show let me see what this looks like. Let's pick on Mondays. These bars represent the range for every Monday that's stored in the data warehouse. I can see down, so between 2 and 4, of course, is 3. Sometimes we have an anemic move, a 3-point range. And then occasionally we've had up to, I guess, 10, 50, almost 11. Sets expectations. I could be like, okay, maybe we'll have our 3-point range, and it has been increasing right here. I mean, we have our 3-point range, or 4. Well, looks more like between 4 and 6, kind of, and here's a sweet spot. This sets expectations. I'm trying to, intraday trade. I'm getting these moves like on Friday. This is how I came up with that. See this point right here? I drew. This point right here I drew. That came from this. Where's that? It came from in here. I did an average. I put it on the screen. So when we hit our high, and it looked like it was going to be the high, or maybe I did it after the fact, I can't remember, but I marked that and this, and then I said it was minus 4 points. And then I can't remember if I put our average on here, but let me see what we at least get okay. So I put it in the text here. I looked at what the minimum was, and at least we usually get a 4-point range from low to high. And it was actually a little bit more because we got to 306.29. And you can see, so other traders, they're doing the same exact things we are, because they're taking the high down to like a minimum of 4, and you can see we kind of got there, and then we bounced, and then it went a little deeper. Like, everybody's kind of coming up with the same stuff. If we take this line and extend it, so we can see once that was achieved, our minimum of 4 points, we kind of obeyed it and stayed, kind of above it. Oh, am I using the SPY? Oh, they're all the same. Let's see here. I'm sorry.
I was just gonna say, yeah, okay.
Well, that's all close. I was making stuff up. So let's see here. Yeah, it's kind of similar, I guess. There was the 4 line. kind of so when we're looking at the data, you know, kind of discount some of these lower ones because I'm like, well, they're not hitting that super duper often. I kind of breeze by them. You know, not to say I can't get that 3 point, but you know. And that, you know, that kind of helps. Right, QQQ, and let me do the average again. .08, so not massive. .08 for what's in the and the data warehouse. It just has. I just use like I don't know. I think it's about August where it starts because it's like just adding more and more data. It doesn't really, you know, it's since there's more and more data, the changes start to be less and less. And it's probably more significant. You know, everybody's always using near-term data to trade off of highs and lows and all that jazz. So 6.08. I have another part of the system. I haven't brought it over yet, and it actually does daily projections. Like it tries to create the candle pattern. Because with past candle patterns, I kind of create something, and sometimes it works really good, and sometimes it's way off on the projection. But I'll be bringing that over in a while. Since we have this, that lets me do the other thing. I can now figure out what contracts are most relevant. QQQ. What is it? 310 call. And then I can bring in the QQQ. What's our 302, L2, 303? You can already see in here. We just see that we don't take any action on Monday yet. Because we're below the trend line. It's not a buy on either side. Monday, when the market first opens, you know, if we gap up one way or another, I'd kind of wait on it. Just kind of sit here and just watch it. Because we're underneath the trend line, so there's no buy either side. Kind of defines our extreme move. And then it looks like the downside, because this floor is so far down, it looks like, of course, the downside right now has preference. What do we close at? 305.36. 305.36. So we closed right around, it was about right on the vector, slightly above it. This is our close. I already know right now there's not much wiggle room up. 305.42. Well, I say that, and I guess it's about 10 points. Wiggle room up. And then our resistance. Oh, yeah, and the range. Yeah, so this is our problem. Well, it's kind of an issue. it does include aftermarket. So whenever these ranges are put into place, like we figure them out, like pre-market and post-market, guys will be using the regular session hours also to support the outside of regular market hours, the after hours. So when we have the vector here, I've seen this, I don't know, like forever, tons of times. Out here, we come down and test, like in this time frame, and it's like something like this, and it's just incredibly annoying. It's like that. This is where Aaron and everybody doing the futures just has a massive advantage. We get something like this, you know, and then it's like this. And we, since we're trading regular hours, I sit there, I can have massive gains on stuff, and I'll sit there and just have to watch it and see the gains just deteriorate, evaporate here because I can't act on them, or I can't get in to take advantage of that move. It's just, and then it goes like, you know, it's like just, it's so annoying. Yeah. It was that Thursday. Yeah. It's just like we're trading these options like regular hours. We're such in gel with them. Just so difficult. Just makes it more challenging. Yeah, because you can just have this after hours stuff happen to us and can't really act on it. Rogue Moose and I was showing him when I trade like earnings, which you really shouldn't do really. But anyways, that is broken right this second inside the graph. I need to fix it because you have to change the thing. But I show the volume ledges over here in the options, and I show the average call and average put, and they will tend to gravitate around those on earnings if they do a move up or down abrupt. But inevitably, like there's always something going on in after hours and can't like really take advantage of it. So it's just so annoying. Another thing, like on the QQQ daily, let me go into a linear graph. And I don't show this yet. I have another thing that will. So there's this dispersion of close to close prices and close to open. And can probably create that real quick. What that is the close price minus the open price variance. For all Mondays, we'll see what the differential is between the close and the open. Well, I'll divide out the name in there. So that's the differential between where it closed and where it, I'll have to build a query because that's not the next day. But anyways, so what I'll do is I'll bring over a query. It'll show our differentials between where we close and where we open, like the number of points. So we have a range over here. What it does is give a range. So here was our close. So we'll give our range like that, where we typically come into the session. So I'll add a query for that instead of trying to build it right now. Oh yeah. So here, so Milk's mentioning trying to find the best contract. So I'll do it for the Qs. So like, let's say we wanted to take a Friday. So what's that, the 24th? Wait, when is Friday? Yeah, the 24th. So let's say we want to find the best upside for the 24th, and we think the market's going to move up 5%. And then, so now it's figured out all the upside and downsides. We click the percent gain at target. So if we had an upside move from to 322.15, and we're currently at 305.36, which would be a big move, then this contract here would have the most gain. So if paying 92 cents for it, the bid would move up to $5.15. It'd be a 4.23 point move up. Look up here. So another whole thing to this equation is, see, it says the number of contracts that make greater than 0% is 74. And see how it says the winning contracts is at 39.8%. So it's usually never that high. It's usually like maybe 20%, 22%, 17%. So I already know by doing 5% that we're above our 20% level. Probably not going to happen. Realistic on contracts, just doing nothing but this. What I want to do is bring that down to, and I'll show you exactly for Friday where it's typically going to land. With the contracts that have traded, we're now at 21% of the contracts have a gain at 306.89. So when I talk about gain, basically the premium's getting tacked onto. And this thing is looking at both puts and calls. So it's looking at all these washouts down here. See how these gains are minus? Because they want these asks to start to move to zero and all this stuff. So whatever we're paying for it, they want this to go to zero on us. So this is looking at both sides of the equation, and it's figuring out the percentage of contracts. And then to see them, I can once again click percent gain at target, and you can see how anemic they are. So if they do have a gain, it's very small. We can do the same thing for the downside. 15. All right, let's go to 20. All right, so we're at 297.42. Wow. $297.42. So without any more information, the market makers, they would like the market to fall in that range. 309 to 297.42. So for this week, right now, they would like it to be kind of like captured in there, but as more contracts come in, it'll can change. And here's our floor and ceilings. So you can see our 20% rule. And the reason I use 20% is because the Chicago Board of Options, and I can't find where the study is, they had found that 20% of the contracts kind of come out in the positive on premium. So no matter where the person bought them, only 20% of the contracts, roughly, plus or minus a little bit, had a premium that got tacked on to where they purchased them. And that premium, it may be like so slight too. You know, it could be like the 1.7, the 9.9. So if throwing darts at the board, you know, if you pick a contract up here, one down here, you know, there's basically they're saying there's 20% odds that there'll be premium tacked on. So, because these things are to generate revenue for people, so they're not trying to get money out to us when we're trading them. We're trying to game it and trade. You can see here, I mean, they just all they do is come down and well, it went up, but they just overall generally continue to work down in price. And that thing's like, I don't know, way up here. It's down the $2 range. So that's why I'm always dinking down here, because the contracts have already started to be washed all out. You know, versus going way back here and getting them into the money. Back there, it's like a sell, the contracts. So just by doing what I was showing helps figure out where the market can be. Thinkorswim, they do it like up here. Maybe it'll pull up today, I don't know. So they show this. So what's Friday the 24th? So what's this line? So they're showing a plus or minus 10.66. And then they don't have the market maker move up here. So what they're trying to communicate is that there can be from this 305.36 up to 10 point move and down to a 10-point move. So our tools, we're trying to just disaggregate what the market maker's doing. We're trying to figure out, okay, where's their pain points? And that's the red line and the green line. Getting outside of the red line, getting down below the green line, and being in this area here where we're around the peak money line. Those are their pain points. Whereas Thinkorswim, all they're doing is looking at like, okay, how did it move up or down? I don't really care about that. I care about like where it could be top side or bottom side, because I want to have a range. I want to have an idea of what can be the possibilities. And then I want to know my trigger points. Like some people call it a spark line, where the vector is. And what that is, it's a place in the sand where you can go above or below, and you go long or you go short to initiate the trade. So once again, on the 760 that I brought in, like the 305.02, I was using the wrong thing. 305.02. So that's the vector. Oh, that was on the 1 minute. Okay, sorry. But yeah, so on the 51, so the 305.20. And so also too, like it's like kind of looking at the little patterns. So I kind of have like a little bit of a ghostish thing showing up, which could also be a dragon. So they're kind of could go either way. So which isn't too telling, but something I like to look at. So, and the thing too, the scanner, let's see if I can connect over to it. So this runs in real time during the day. Once I get an installation package, and everybody can install this right on their desktop if you want. Like this one's running right off my desktop. So over here, this is just basically telling me if things are moving above or below the vector. So I can see IBM, for example, is below on, it pulls in the wave and stuff. So it's a 2 daily. So if I just want to find things that are being short or being long right now, I can by going in here. And let me add IBM. I think I already did it. IBM 760. All right, so IBM here it's showing positive. So this just, like again, it's just for stuff I'll look at. Like here's Intuit. So it started to go short on the daily. $67. So ideally, so I would watch this one. I'm not a super big fan of Intuit, but I would watch this one like for resistance. Because our dailies overall is going short, so that means down here in the lower time frames should probably start to go into a short period. Or I can just, use this graph too. Where we start to go short. We could be able to come in here and look at the L1s and see where our targets could be. So I could go 402, so a 400 put. Do this. Put, see what this looks like. The yellow means that the bid ask were moving up and down, but there was no buyers. And this is how I'll find some of those really big movers when I'm using the scanner. I haven't looked at it in probably a week and a half or something, but this is how I found FedEx. It moved a lot. And then two, just I'll kind of sometimes look at this just to get a general overall feel for the market. Like if there's a lot of print belows or print aboves. It's kind of a little mixed. And I hope I was kind of clear on this. So when the dots, like here's a W formation, which is awesome. They're usually bullish. And so I'm looking at these dots, if they're above or below the purple vector. See how this one got above the purple vector, and then it went up. This one did. So this is like a whipsaw. It got up, but it wasn't sustained. And then finally it moved up. So this is what I'm looking at. Like here's a red. that developed got underneath the vector and then went down. So that's what I'm looking at for my trade trigger, is the signal here when we're breaking above or below. You guys have to be ready because like here, it wasn't sustained. So that's why like sometimes at 760, I'll go into that, use it because it's a little bit faster acting, waiting on a day by day basis. Using 2 at 716. And 2, even though on the daily it's saying it's starting to go short, sometimes I'll come in here and play them because they'll pop. So it's a 412. So an H. So if that went to an H. H1, 418. Oh my God. Yeah, no thanks. It's $10. Well, and then anybody that's new to this, I had to turn off I added the real-time streaming. I had to turn it off because we're using Yahoo and there's so many of us pulling data that they kept blocking us. So I had to turn it off. So, it's still back to the same thing where you have to double click to pull in the most recent price. That's what happens when we use free stuff. Oh, and here was, let me pull up EA. We're waiting on this one forever. I took it out of my watch list because I was like so tired of watching it. It was way down here. I kept waiting and waiting for it to pop. Finally, it did. I gave up on it. It seems like we were watching it down here. It just was dragging its feet. It wasn't even that great of a move. Oh, I hope. So over here, you can just turn on various things if you want. There's another thing, these volume squares, and they work at lower time frames. I'll show what that looks like. I'll use what was the one? Airbnb. 60 and then a 7. Where did it go? 7. 760. So this volume squares So what it does is these squares are looking at the volume and where it's trying to come in at. It's trying to say whether it's short or long volume. So I call them palm trees. So when you get these little palm trees, these uprights, and then you get this stuff blowing in the wind, you can see there was red here that showed up way up here on Airbnb. And then, then it followed short. And the same thing back here to the left. So the volume squares are looking at accumulated volume and projecting the price action as long or short price action based on stuff I have under the hood. So sometimes it kind of makes it easier to see. Like you can see here, it tracked it up pretty well. Like it was all green. And then finally it said, hey, this looks like it's short action that's coming into the market. So you could put on a short there, here. So it's just a visual tool, you can turn it on and then see. So spy raiders say nice stuff. Hear my incoherent lecture here of this stuff or explanation. So the volume squares is doing that. So if we expand it, and you can see here the red, so it got faked out here for a second, and then finally, so it's all math, so it's not perfect, but it helps visually. And here we're getting volume squares for green, for Airbnb. And another thing we see is we're getting an ascending support. So, so this would possibly, and then up here is suggesting the price as it could get to 124, 127 area to create symmetry. And we look back left here. That's my back testing. I look to the left-hand side and I see how likely it is to get to the past high. Sometimes very likely, sometimes not as much, but it gives an idea. So I'm just not kind of shooting in the dark. Let's see. And there's just some other stuff down here. So this is showing 15-minute interlaced into the 60-minute I just turned on. So I just have all these little things I'm bringing in that they just doing it all that can help, spot a potential trade. This looks like it may be into a ghost. Oh, Sri asked me about the graph with daily support and resistance for the QQQs. So that several different ways I do it. Maybe I've already answered it, but I'm doing the 760. With these SNR dots on. it's basically just trying to figure it out, you know. And so basically, if you know support breaks, you know, it goes down lower. And keep in mind that since people are looking at similar information we've got, they're not always going to wait until it drops to every level perfectly. Like here, probably, you know, it was headed to 290, but, you know, everybody's trying to out trade everybody else. So once it just started pulling back that much, people hopped in. But if you turn on that S&R thing, it'll bring all this in as a visual to kind of help gauge. You know, and you can see by kind of our poor man's way of back testing, we just look back for comfort level. We can see that sooner or later, one of the supports, like here, this one caught it. You know, these broke through, so it's kind of a matter of being patient and waiting for that. So that's one way. Another way is we do the mathematical clusters for supports. So we wait for these various levels, and you can change it in the code if you don't like them. So you can go down, this is at 80, 50, 20, minus 10%, and you can change it to whatever you want. If you want to be like, okay, I want to do like, try to find 70% levels, and just, you know, copy and then change that to 70 and save it. And then let me remove it and add it in. And now it added the 70% level. Or you can do it this way. You can bring the code in. While you're in here, you can just change it to be 75 and do a run. And it'll just do it right there. And you can stop the run, do a 60, or, you know, as much as you want to put in the 60, you can stop the run. So I do it just like a development environment. So, because I like it to be really fast and quick. So like that, and you know, you can add as many or few of these as you want. If you don't want all those, you can just take them away. JavaScript, so that's a comment. Comments to the lines to comment the code out. And it just leaves the 180% because I put comments in here. And so the mathematical clusters, that's, you can go read about mathematical clusters on Google. So it's basically a way to identify like data sets. So it's using all this information to figure out where 80% of the time we get to. So that means 8% of the time when it goes down, it gets to at least there. It triggers a short. So, you know, it's all in how you want to trade it. So those are kind of the two ways that, and you can see this is like kind of looks like a bullish M possible. Maybe. I'm checking questions. So, I don't know, unless somebody wants to see something else. If you want to change your clock, you can go in the script code, and then you can change, you put your name in here, Okay, I'll say taco time. And then I click stay on top, so it says on top. And then when I run it, it says taco time. Or you can change anything in here. Eventually I'll have more of the timers and stuff in here so that when the system automatically enters into a trade, it sets timers on it. So if it's not performing, it can close the trade out. So when I'm working on other stuff and I can't have my full attention to trading, okay, I'll tell it, okay, enter the trade on a break. So I can tell it automatically, hey, when I break this line, close above it, enter the trade, set my timer. So then when I'm working on stuff over on my right side, I look over my left side, I'm like, okay, I entered a trade, started 10 minutes ago, you know. And then at that point, I can go in and set a stop loss or whatever, just let it run and just kind of beep at me. So anyways, that stuff I'll have pretty soon. I don't know. I don't really have anything else. All right, I guess I'll wrap it up. Hey, thanks for coming. Appreciate it. Alrighty.
Take care, guys.
I'm gonna hang